Have you ever sat there, staring at the screen, watching a trade slowly go against you, and somehow you still didn't exit, even though you had a stop, even though you knew better, even though you promised yourself the last time would be the last time? Yeah, I've been there too. And I'll be honest with you, this video isn't going to be about technical indicators, new entry tricks, or flashy trading hacks. This one's about the real reason most traders fail. The one topic that gets mentioned but never deeply understood: risk management. But not in the way you've heard it before. Because this isn't about always risk 1% per trade or set your stop loss and walk away. That's basic stuff. And let's be real, it doesn't work if you can't stick to it. The truth is, most traders don't have a risk problem, they have a psychology problem. They don't ignore risk because they're reckless. They ignore it because deep down, they're emotionally attached to the outcome of the trade. They're trying to feel something, to fix something, to prove something. And the market? It knows. It always knows. In this video, we're going deep, like beneath the surface deep, into the 15 psychological traps that quietly destroy your ability to manage risk, even when you know better. You'll learn why small wins can actually make you more reckless, the hidden emotions behind chasing losses, what your position size is secretly saying about your confidence, and how stop losses aren't for your capital, they're for your nervous system, and why hope is the most expensive drug in trading. If you've ever broken their own rules, increased your size out of frustration, or begged the market to reverse so you could just get out break even, this video is for you. We're not just going to talk about how to control risk, we're going to talk about how to control you. Because when you get your psychology right, the risk rules actually work, the plan actually sticks, and you finally stop self-sabotaging when it matters most. So if you're serious about lasting in this game, not just hitting lucky trades, but actually becoming consistent, then make sure you stick around for all 15 sections. Every single one reveals a psychological blind spot you probably haven't even noticed. And hey, before we dive in, take a second right now and hit that subscribe button if you find value in real, honest trading psychology content like this. It helps more than you think, and it tells me to keep making these deep dive videos for you. Also, let me know in the comments, what's one risk rule you've broken recently and why? Let's be real about this stuff. It's the only way we grow. All right, let's get into it. Chapter 1. The Illusion of Control. Why you risk more than you think. You think you're in control. You plan your trade, analyze your chart, set your stop, calculate your size. You feel confident, even calm. But deep down, there's a lie, a quiet illusion, and it's costing you more than you know. Because the moment you press that buy or sell button, you're not really managing risk. You're managing emotion. You're managing you. Let's be honest. You tell yourself the trade only risks 1%, but your nervous system doesn't believe that. Not when your ego's on the line. Not when your last 3 trades were losses. Not when you're secretly hoping this one's the big one that finally flips your week green. You may have numbers on a spreadsheet, but what you're really risking is confidence. And confidence is fragile. The truth is, most traders don't blow up because they lack strategy. They blow up because they overestimate control. They think planning equals discipline. They think setting a stop equals obeying it. They think using small size means they'll stay rational when it moves against them. But planning is not the same as execution. And this, right here, is where most traders fail. Because when the market moves against you, something primitive wakes up. Your brain starts whispering, "Wait, maybe it'll bounce. Give it a little more room. It's just noise. Stay in." You don't even realize it, but you're negotiating with reality. And in that moment, you're no longer managing risk. You're managing regret. That's what most traders ignore. Risk management isn't about preventing loss. It's about regulating your emotional response to the possibility of loss. It's not a math problem. It's a self-control problem, a self-awareness problem. You think you're making decisions based on price action. You're not. You're making decisions based on pain tolerance. And here's the dangerous part. Pain is relative. It shifts with your mood, your recent wins or losses, your expectations. It morphs. So unless you're aware of this, unless you've trained yourself to feel the discomfort and still act rationally, your risk controls mean nothing. Because the trade you risked 1% on, it could become a 10% loss. Not because the stop wasn't set, but because you moved it, you canceled it, you widened it, you froze, and you don't even remember doing it. That's how subtle it is. That's how easy it is to lie to yourself in real time. So let's get real. Risk management, real risk management, begins before the trade. It begins with the truth about how you respond under pressure. It begins with asking, do I really have the emotional capacity to handle this loss? What happens to me when I'm wrong 2, 3, 4 times in a row? Because most traders build a system for their best self. But you trade with your real self. You trade with your tired self, your over-caffeinated self, your anxious self, your revenge-driven self. That's the version of you making live decisions. That's the version you need to manage risk for. And the truth is, most of us aren't prepared. Because real risk isn't just financial, it's psychological. It's the risk of self-doubt, the risk of shame, the risk of failure. And unless you face that, really face it, you'll keep breaking your rules, quietly, subtly, convincingly. Because you don't break your rules out of stupidity, you break them out of fear. And fear doesn't announce itself. It hides inside logic. It disguises itself as waiting for confirmation, letting it breathe, being flexible. You rationalize, and then you lose big. So let's shift something today. Let's stop pretending risk is just a number. Risk is a mirror. It shows you. Every trade you take reflects how well you know yourself. Every loss reveals how much pain you can handle without needing to fix it emotionally. And every rule you break is a signal that you're still outsourcing your emotional safety to the outcome of the trade. That's not risk management. That's gambling with your own psychology. So here's the uncomfortable truth. If you can't handle a string of small losses, you'll never survive long enough to experience consistent wins. Because the market isn't testing your strategy, it's testing your emotional endurance. Let that land. Risk management isn't a tactic, it's a threshold. It's the edge between your plan and your panic. And you must decide every day, every trade, which side you want to live on. So next time you calculate risk, go deeper. Don't just ask, how much can I afford to lose financially? Ask, how much discomfort can I tolerate without needing to interfere? Because that right there is the real stop loss, your nervous system. And if you don't respect its limits, the market will find them for you, harshly. So start training now. Train to sit in discomfort without reacting. Train to watch price move against you without abandoning your plan. Train to feel the urge and not obey it. That's risk management. It's not sexy, it won't impress anyone on Twitter, but it will keep you in the game. And in this business, Survival is everything. Let go of the illusion of control, because the sooner you stop pretending, the sooner you can start trading with the truth. Chapter 2: The Silent Killer. How Hope Destroys Your Capital. Hope. It sounds innocent, doesn't it? Even noble. It's what keeps people going through hard times, what fuels ambition, perseverance, and courage. In life, hope is often a strength, but in trading, hope is a slow, silent killer. You don't even see it coming. You're in a losing trade. Red candles drip down the screen. Your stop is getting close, and that old voice creeps in. Maybe it'll bounce. It's just a pullback. This can't go much lower, not after that last green bar. And without even realizing it, you're hoping. Not analyzing, not acting, not adjusting, just hoping. And here's the trap. Hope feels rational. It wears the disguise of confidence, of patience, of discipline. It sounds like something a strong trader would feel. But it's not strength. It's fear covered in perfume. It's the fear of accepting a loss, the fear of admitting you're wrong, the fear of closing a trade and feeling the sting of regret. So instead of clicking that close button, you sit, you stare, you watch the candles bleed through your confidence. You tell yourself you're being smart to wait, that the market's just faking you out, that this drawdown is temporary. But deep down, you know. You're holding on to a trade that doesn't want to be held. You're married to a position that already filed for divorce. And worst of all, you know you're not following your rules. You're following your feelings. Let's call it what it is. Hope is procrastinated pain. You're delaying the loss, delaying the truth, delaying the action you know you should take because it hurts. But the longer you delay it, the bigger the pain becomes. You watch a -1% trade turn into -3%, then -5%. You say, I'll get out when it comes back to break even. Then it hits -7%. Now you're panicking. Now you're stuck. Now you're just praying. And that's the real danger. When hope turns into prayer, your account becomes a sacrifice. You can't afford that. You can't afford to let emotion masquerade as patience. You can't afford to let your psychology rewrite your rules mid-trade. You can't afford to hope the market saves you, because it won't. The market is not your friend. It doesn't care about your feelings. It doesn't owe you a reversal. And the second you start needing it to behave, you've already lost. You gave up control. You gave up discipline. You gave up everything that gives you an edge. Hope is what fills the space between your plan and your pain. And every second you spend in that space costs you money, costs you mental energy, costs you trust in yourself. You start doubting your process. You stop reviewing your trades honestly. You begin to say things like, I just need one good winner to come back. No, that's not trading, that's coping. And coping isn't a strategy. So what do? How do you kill hope before it kills your capital? You train for honesty. You train for detachment. You train to see a losing trade, and instead of hoping, you act. You cut it. Not because you're afraid, but because you respect the process more than you fear the pain. You don't need the market to come back. You need yourself to come back. You need your consistency to return. You need your clarity to return. You need your ability to take the next trade cleanly, without baggage. And the only way to do that is to stop hoping and start honoring your plan. Think about this. How many times have you hoped a trade would turn around and it didn't? How many times has hope cost you more than the original risk? It's not random. It's not bad luck. It's psychological debt. And you're paying it with every moment you refuse to accept what's already true. So here's your new rule. No hope in the heat of the moment. Hope is for your long-term growth. Hope is for your bigger goals. Hope is for the vision you have of becoming a skilled, professional, resilient trader. But in the moment, you don't hope, you act. You cut the loss. You move on. You trust your system even when it hurts. Because pain now is cheaper than regret later. Remember that. And remember this too. Hope might feel comforting in the short term, but it's poison to your trading account in the long term. It weakens your discipline. It rewires your brain. It turns your edge into a coin flip. You don't need hope. You need rules. You don't need comfort. You need courage. And you don't need a miracle. You need consistency. That's how you win in this game. So next time you feel it creeping in, that warm, soft voice whispering, maybe it'll bounce, you stop, you breathe, you remember, that's not strength, that's fear wearing makeup. And then you act, because you're not here to hope your way to success. You're here to trade with truth. Chapter 3. Sizing it wrong. The hidden danger of overconfidence. At first, it feels harmless. You've had a few green trades. You're in the zone. The chart looks clean. The setup is lining up just right. And suddenly, you hear it. I could go a little bigger on this one. Just a little. Maybe it's 2% risk instead of 1%. Maybe it's double the normal position size. Maybe you skip the stop altogether and tell yourself, this one's a no-brainer. And just like that, the seed is planted. The most dangerous seed in trading, overconfidence. Not arrogance, not ego. Something subtler, smoother, sneakier. A quiet belief that this trade is different, that this time you're right, that this setup is so good it justifies bending your rules. It always starts with success, a few wins in a row, a small streak, some positive P&L that makes you feel invincible. And instead of following your risk plan, you start upgrading your bets. Without realizing it, you're no longer sizing for sustainability. You're sizing for certainty. And in trading, that's a dangerous place to live. Because no matter how good the setup, no matter how many indicators align, no matter how many times this pattern worked before, you are never certain. Ever. And the second you believe you are, you've stopped managing risk. Because now you're making decisions based on feeling, not process. And here's the part that hurts most traders. It doesn't blow up right away. In fact, sometimes it works. You size bigger and you win. You risk 3% and it rockets in your favor. You ignore the stop and the market rewards you. And that's the trap. Because the reward doesn't validate your decision-making. It just reinforces your illusion. You start believing that bigger size equals bigger skill. You start thinking that trading in the zone justifies breaking the rules. You tell yourself, I've earned the right to push this one. But risk doesn't care about your recent wins. It doesn't care how good you feel. It doesn't scale with your confidence. It scales with your discipline. And if you don't respect that, the market will remind you. Hard. Because eventually the streak ends. The hot hand cools off. The same pattern you trusted fails. And now you're not down 1%. You're down 5% or 10% or more. Why? Not because your strategy failed, but because your size lied to you. You sized like a winner, but traded with the psychology of a gambler. And here's the uncomfortable truth. If your position size changes with your emotions, you don't have a system. You have a mood swing. That's not sustainable. It might feel good in the short term, but long term, it's a death sentence for consistency. You can't build a stable trading career on unstable decision-making. So what's the fix? You return to neutral. You stop sizing based on how confident you feel, and you start sizing based on what you can survive. You don't size for the best-case scenario. You size for the worst case, because that's the only thing that's guaranteed. Your worst-case risk is your reality. Everything else is fantasy. Profit? Optional. Control over loss? Mandatory. You stop letting green trades fool you into thinking you're invincible. You stop telling yourself, this one's different. You stop flirting with the idea that a bigger position means you're getting better. Because getting better has nothing to do with size. It has everything to do with self-control. In fact, real growth in trading isn't when you size up after a streak. It's when you can stay steady even when the market tempts you to bet bigger. That's what pros do. They don't size up just because they feel good. They size up when the system, not the emotion, tells them it's time. And even then, they do it gradually, deliberately, measured. Because pros don't try to double their account in a week. They try to survive the next 1,000 trades. You need that mindset. You need to stop treating size like a shortcut. It's not. It's a magnifier. If your mindset is shaky, bigger size makes the cracks louder. If your emotions are unstable, bigger size turns them into earthquakes. If your discipline is weak, bigger size will break you. But if your discipline is strong, if your system is real, if your emotions are regulated, then size becomes an amplifier of truth, not a lottery ticket. So the next time you feel tempted to go bigger on this one, pause. Ask yourself, is this coming from process or pride? Am I following my plan or chasing a feeling? Would I take the same size if my last trade was a loss? Because if the answer changes based on your last outcome, you're not trading the market. You're trading your emotions. And that's a game you can't win. So stay steady, size with humility, trade with patience, grow with discipline. Because risk isn't something you conquer with confidence. It's something you respect with consistency.
Chapter 4. The real reason you chase losses. You tell yourself you're being logical, that you're just trying to make it back. You stare at your screen, sweaty palms, tense shoulders, jaw clenched, thinking, if I can just catch this next move, I'll recover what I lost. I'm not giving up after just one bad trade. But deep down, you're not trading the market. You're chasing validation. Because this isn't about money anymore. Not really. This is about being right again, being okay again, being whole again. And that's the dangerous shift, the one most traders don't see happen until it's too late. You take a loss, maybe 2, maybe 3, and now you're not trading your setup, you're trading your identity. You're trying to prove something to yourself, that you've still got it, that you're not a failure, that you can bounce back fast. And that pressure, that emotional urgency, it shatters your risk management like glass. You enter a subpar setup because you can't stand sitting still. You size bigger because a smaller win won't feel like enough. You skip your stop because taking another loss might break you. And in that moment, you're not a trader anymore. You're a gambler in denial. That's what chasing losses really is. It's not strategy, it's not momentum, it's not taking advantage of volatility. It's emotional survival. You feel wounded, and instead of healing, you rush to fight. But here's the brutal truth. You can't fight your way back to discipline. You can't outtrade the emotional damage of a loss. You have to feel it. You have to process it. You have to sit with it without needing to fix it with another win.
Because the more urgently you try to make it back, the more likely you are to make it worse. And that spiral, it's responsible for more blown accounts than bad strategies ever will. Let's break this down honestly. What's really happening when you chase a loss? You're trying to avoid shame. You're trying to escape the uncomfortable feeling that maybe, just maybe, you aren't as in control as you thought. And instead of facing that, you double down. You enter again. You swing harder. Because a win would feel like relief. But that's the trap. You're no longer trading to grow your account. You're trading to fix your feelings. That's not risk management. That's emotional outsourcing. And you know how it ends. You dig a deeper hole, you get more reckless, you wake up the next morning not just down financially, but shattered emotionally. You feel disgusted with yourself. You promise, I'll never do that again. But a week later, it happens again. Why? Because you never addressed the real problem. You didn't chase losses because you're undisciplined. You chased them because you tied your self-worth to the outcome of a trade. And that's the root. When your identity is fused to your performance, every red candle feels like an insult. Every stop feels like a humiliation. Every drawdown feels like a personal failure. And of course you want to fix it fast. Of course you want to erase the pain. Of course you want to win it back. But trading doesn't work like that. There's no shortcut to emotional healing. There's no fast-forward button on growth. You have to sit with the discomfort. You have to resist the urge to act on impulse. You have to learn to lose well, without needing to undo the loss immediately. Because that's the mark of a mature trader. Not someone who never loses. Someone who doesn't let a loss hijack their psychology. Someone who can take a hit, breathe, and wait, not rush. So what's the fix? You reframe the loss. You stop seeing it as an insult. You stop seeing it as a personal failure. You start seeing it as a tuition payment, a necessary cost to being in the game. Because losses are data. Losses are neutral. Losses don't mean you're broken. They mean you're trading. The real danger isn't the loss itself. It's what you make it mean. If you let it mean you're stupid, careless, weak, you'll spiral. If you let it mean you're human, learning, evolving, you'll recover. And you'll recover with your risk intact. That's the real win. It's not about avoiding pain. It's about navigating pain without breaking your rules. So next time you take a hit, stop. Pause. Ask yourself, do I need to trade again, or do I just need to feel better? Am I trying to regain capital or emotional control? Because those aren't the same thing, and only one of them leads to growth. You have to protect your capital, yes, but more importantly, what? You have to protect your state of mind. Because once that goes, the rest follows fast. So let this sink in. Losses are inevitable. Chasing them is optional. You don't need to make it back today. You don't need to prove anything right now. You need to breathe. You need to rest. You need to trust that sitting still is sometimes the strongest move you can make. Because you're not here to be right. You're here to be consistent. And consistency doesn't come from revenge. It comes from respecting the plan, especially when it hurts. Chapter 5. False Confidence, the Toxic Effect of a Few Wins. Nothing feels better than a winning streak. You nailed the entry. The trade exploded. You closed green. Not once, not twice, maybe 3 or 4 times in a row. You're buzzing now. Your posture changes. Your voice gets sharper. You check your phone more often. You scroll the charts with a little more swagger. You feel it creeping in, that subtle thought, I've figured this out. And that, right there, is the danger. Because confidence isn't the problem. False confidence is. And it's so subtle, so seductive, you rarely know you're in it. You don't crash into it. You drift into it, one green trade at a time. And here's the kicker. It doesn't feel reckless. It feels earned. You've put in the hours. You studied the charts. You've been patient, selective, disciplined. So when the market hands you a few wins, it feels like confirmation. Finally, it's working. But here's the truth. You're not as in control as you feel. You're just riding a wave. And if you mistake the wave for your own swimming skills, you're going to drown when the tide shifts. Because false confidence changes your behavior. You stop doing the boring things that got you the wins. You loosen your rules. You widen your risk. You trade more setups. You start assuming outcomes. It doesn't feel like overconfidence. It feels like evolution. But it's not. It's emotional inflation. You're taking yesterday's success and spending it today without checking the balance. And the market loves that because it knows what's coming next. The moment you believe you can't lose, you do. And not because your strategy failed, but because your discipline got hijacked by your own self-image. You wanted to feel like a real trader, so you started acting like one in your head instead of proving it with consistency in your actions. And when the loss hits, it hits harder. Because false confidence sets you up for shock. You didn't expect to lose. Not you, not now, not after that clean run. And that's when the spiral starts. You doubt everything. You start second-guessing. You enter too early, exit too late. You look for reasons, for something or someone to blame. You weren't ready for the loss because you thought you were past them. But no one's past them. Not the pros, not the veterans, not the seven-figure traders. No one graduates from taking losses. The real difference between you and the trader you want to become, they expect them. They build for them. They manage risk knowing that wins are temporary and humility is permanent. So if you want to evolve, you need to anchor your confidence in your process, not your outcomes. You need to base your sense of progress on your ability to stay disciplined, not your ability to win trades. Because anyone can follow rules during a hot streak, but only the real ones stick to them when they're tempted to flex. You want an edge? Here it is. Stability. The trader who's stable wins long term. The trader who stays steady through the green and the red, that's the one who builds something real. So how do you build that? You celebrate wins quietly. You analyze them like losses. You look for what was repeatable and what was luck. You ask yourself, would I take this trade again under identical conditions? Was my risk managed properly, or did I get away with it? Was this set up from my plan or from my excitement? Because false confidence isn't just a risk to your next trade. It's a risk to your identity. It convinces you that you're better than you are, and then the market reminds you you're not. Not yet. And that moment of reminder, that's your turning point. You can get angry, defensive, impulsive, or you can get honest. You can breathe. You can reset. You can say, that was a good run, but I'm not invincible. You respect the streak without attaching your ego to it. Because ego makes you blind, and trading blind is how you blow everything. So let this land. You are not your last win. You are not your last streak. You are the average of your habits across hundreds of trades. Consistency builds wealth, not streaks. And confidence that comes from results alone, it will fade the moment the results shift. But confidence built on discipline, that lasts. That's the real win. So celebrate your victories, but stay humble, stay grounded, stay you. Because the second you stop thinking like a student, you stop growing. And in this game, if you're not growing, you're decaying. So let the wins come. Let them feel good. Let them stack up. But never let them fool you into thinking you've arrived. Because the truth is, there's no arrival. Only the next trade. And your job is to meet it with clear eyes, calm hands, and a risk plan that doesn't change no matter how good you feel.
So here we are. 15 brutally honest truths about risk management. And chances are, at least 5 of them hit a little too close to home. Maybe you saw yourself chasing that last loss. Maybe you've been sizing up without realizing it. Or maybe, the hardest one, you realize that most of your trading decisions aren't based on strategy at all, but emotion. And look, that's not a flaw. It's not weakness. It's human. Every trader goes through this. The only difference between those who make it and those who don't is that the ones who survive are the ones who finally stop lying to themselves. They stop pretending their plan is enough. They stop thinking mindset is a soft skill. They stop blaming the market and start fixing their own behavior. Because risk management isn't about avoiding pain. It's about learning to sit with it without breaking your rules. It's about staying calm when the setup fails. It's about walking away after a red day without doubling down. It's about respecting the edge, not just when it's easy, but when it's uncomfortable. That's what real traders do. And now, so will you. You don't need to be perfect. You don't need to master it all at once. You just need to be honest and start catching yourself in the moment, one moment at a time. If this video helped you slow down, reflect, and actually think differently about how you're handling risk, then do me a quick favor and hit like. And make sure you're subscribed for more no-hype, no-BS trading psychology content just like this. And I really mean it. Take a second and drop a comment below. What's the biggest insight you got from this video? Or maybe, what's the hardest truth you had to face about your own risk habits? Let's keep this conversation real. No judgment, just growth. And if you want more deep, second-person stories that help you feel calm, focused, and emotionally aligned with your trades, check out the next video linked here at the end. You're not trading alone anymore. You've got this, and I'll see you in the next one.